Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
This is Bazaar Morning Call, live from the CNBC TV18 headquarters in Mumbai.
These are looking like a very good set of numbers on the petchem side.
I don't think that anyone must have expected this kind of EBIT margin of 19.5%.
This looks like a big beat. The company has delivered a 13.7% revenue growth.
Nobody anticipated that bottom line to be so robust.
Growth has been given a halt, and they have decided to strengthen their balance sheet.
The NI growth is much better than our poll, and the profit is 5 times our poll.
It does look like a miss, at least in terms of the revenue front.
Good morning. Welcome to Bazaar Morning Call. I'm Lata, and with me is Sonia. The bulls have got a huge growth injection. There is no taking away from that. Already they are at an advantage, the bulls. There's a positive FII number of 700 crore. And on top of it, I mean, when Reliance moves, it has a seismic impact on the Nifty itself, given its weight in the index. And therefore, we should expect that we are going to have, a massive help from Reliance for the bulls. Of course, let me put the disclaimer and the disclosure on the table. Reliance owns the channel you're watching, but there were superlative numbers, as you just heard from the string of voices. The other two numbers, Bank of Baroda and ICICI Bank of Baroda not Nifty, but those were also extremely encouraging numbers. In fact, ICICI, maybe you can call it a mixed bag because it was a loss ultimately, and there was a lot of slippages from the non-watch list. So there are worries there, but the ADR was up after the results, and therefore clearly the markets have taken that as a positive set. There is domestic growth, no taking away from that. And on top of all this, you have a fairly strong US GDP number of 4.1%. While that may not have brought the US indices in the green because of their problems with tech companies, those tech companies, Twitter and Intel, are not going to impact the Indian markets. And therefore, my sense is today the bulls, as in the past week, are starting with a very big advantage.
Yes, they are. In fact, that's what we've seen on Friday as well, right? You spoke about the FIIs buying. Both FIIs and DIs bought in the cash market on Friday because the sentiment has been so good. Lata, just talking a bit more about the numbers. I mean, Reliance's numbers at petchem EBIT growth of more than 20% is something that the street will take with both hands. But I think what really surprised the street maybe is Bank of Baroda's loan growth number of 20%. I was reading a note which said that after 2 years of consolidation, finally loan growth has started to pick up. Does that say something about the PSU banking space in general, as to now we'll shift focus away from asset quality and talk about growth?
I really wish I could wholeheartedly agree with you that, the worst is behind. Definitely a lot of recognition is over. But we also broke a news in the morning that the Reserve Bank has pulled out a second AQR list, Asset Quality Review list, that has some about 200 odd companies. And while many of them are recognized, chances are Reserve Bank wants them recognized from an earlier date. So, if you take a recognition earlier, then it's 25%, 15% provisioning in the first year, 25% in the second year, 40% in the third year, and 100% in the fourth year. So if you're asking some loans, like say Ratnagiri Gas, Dabhol, to be recognized from 2012, then you have to provide for 100% this year.
Okay.
So chances are, the bonhomie that has been unleashed by BOB may not spread to PSU banks. And in fact, the Axis's and the ICICIs and the BOBs and the SBIs, even after a good showing, some of them in this quarter, are going to have huge provisioning. Those who have 70% provisioning are safe, like BOB. But those banks that do not have that kind of provisioning, my sense is ICICI gave that 66% provisioning because of this AQR list. I mean, RBI has not given you any scope. They've just said that you have to recognize, not just recognize, but also provide. While that list is not yet firmed up and there is still a dialogue, my sense is that, that bonhomie is not going to be extended to all PSU banks.
Okay, and then just a couple of more numbers, right? I mean, on HCL Tech, although the constant currency growth was aided by acquisitions, it's the highest ever order inflow that the company has reported this time. So I guess orders are coming in, growth is strong. Maybe that's the thread that the market may hang on to.
No, I completely take your point about loan growth. Yeah. BOB has shown loan growth, and even ICICI domestic loan growth is not all that bad. Yeah. It's because their international book is contracting that the overall comes at 11%. Otherwise, I think it's a 20% domestic loan growth. Yeah. So clearly there is a spring in the step in the economy, and that is being reflected in the banking sector as well. Things are going good. No two ways about that. Okay, so on that note, let's take a look what our wise experts have to say as we head into trade this Monday morning. Rhythm Desai of Morgan Stanley says Indian equities are trading at all-time highs, but there are stocks which demand some attention due to underperformance despite strong fundamentals. He adds 3 such stocks to their focus list today: Ashok Leyland, ICICI Pru and Eicher Motors. They are removing Maruti Suzuki, Dr. Reddy's and UPL from their focus list. He says Morgan Stanley has been holding these stocks since May 2014, September 2017 and November 2015 respectively. Okay, let's get you some money market views. Not much happening there. The big event will of course happen on Wednesday when the monetary policy will be announced. Ahead of that, Praveen Brahmavat of Veracity says the rupee will remain flat in today's session. He expects the spot USD INR pair to trade in a range of 68.50-69 for the day. And on the bond market, Ajay Magnolia of Edelweiss says the currency and crude prices have lent stability to domestic bond markets last week, and gilts are expected to tread cautiously ahead of this week's monetary policy review. He expects the 10-year benchmark bond yield to trade in a range of 7.75 to 7.80% for the day. And then a lot of global cues, whether it's tech stocks or whether it's US GDP. Over to Mangalam for the world view.
Well, a couple of data points stand out. On Friday's trading session, fear on Wall Street did spike. The CBOE VIX, which was the measure of that, spiked about 7% as we saw a decline across the 3 frontline indices. The hardest hit was the Nasdaq, which was down about 1.5%, led lower by two index heavyweights. We had the likes of Twitter, which was down about 21% as the number of active monthly users declined. And we had Intel too, which was lower by about 8.5% as the company announced some delays on its next generation chips. In terms of positive data, though, the US GDP growth at 4.1% is at a near 4-year high. Donald Trump himself said that this was great and better times were ahead. However, talking about GDP, the French GDP did not grow as much as the analysts expected. 0.2% was much below most of the street expectations. That said, the index was supported. All the frontline European indices were higher. The French stock Carrefour, the retailer, that one moved by about 12% on account of a good growth in their first half profits. Moving to Asia, though, most of the indices are in the red. The Nikkei in focus in particular. Tomorrow is the Bank of Japan meeting, and the SGX Nifty indicates a mildly flat start.
Okay, thank you very much. There was one more plate we can bring up, the Chinese yuan. That's at 6.83 as we speak. So clearly depreciation on in the dollar yuan. And that's something which other Asian countries can't ignore. You can see the red on the Asian screen. So there's more commentary coming on that. Speaking to CNBC, Morgan Stanley's global chief economist Chetan Ahia says he sees an upside in the Chinese yuan going forward, so doesn't see too much of depreciation. Let's listen in.
The dollar was appreciating against all the currencies but yuan from middle of February to June. And that divergence is what has been given away in the last few weeks. And so we think that that adjustment of, first outperformance of RMB and then underperformance evens out to back to mid-February levels. And so going forward, we think RMB will be more sort of normalized than it was doing before mid-February. And so we expect that if the trade-weighted dollar now going forward appreciates, the RMB will depreciate, and if trade-weighted dollar depreciates, the RMB will appreciate. And our house view is that the trade-weighted dollar will depreciate going forward. So we think we should have some upside in the RMB going forward.
Okay, that's the word coming in on global currencies. But back home, there's plenty to talk about. This morning, the attention will be focused on the raft of big earnings we got over the weekend. So let's start off with the biggest. Reliance, the CFO, Alok Agarwal, says he sees 1.4 million barrels of oil demand growth this year. Remember, the petchem business was very strong this quarter around. Listen in.
As far as the macro is concerned, we continue to see 2018 being targeted at 1.4 million barrels of oil demand growth, with predictions of similar growth in transportation fuels as we saw last year. The growth in emerging markets, non-OECD countries, dominate the transportation fuels.
Our entire research team is here to give you TV18's top 10 list of stocks, and today, by a large measure, the top stock is going to be Reliance Industries. Sonia, the numbers?
Well, the numbers look better than what the street was estimating for sure, specifically on the petchem business, which has grown 22% on a quarter-on-quarter basis on the EBIT front. It was much better than any street estimates that I saw. In fact, if you look at the trend for the petchem business, 7854 crores is the EBIT this time compared to 6435 crores last quarter and 5753 crores the quarter before. The gross refining margins, the refining business was under pressure, but that's in line with estimates really. So $10.50 a barrel is bang in line with estimates. It's lower than what we saw last quarter. I think it's both the RelGeo and the Reliance retail business that has surprised, and that's something that the street will take very well. Reliance retail growth was 7% on the revenue front, 12.5% on the EBIT front, and even the RelGeo, the ARPUs have not fallen as bad as what the street was estimating. However, the only thing, Lata, is that the stock has rallied quite a bit. So, just keep that in mind. Also, the capex has risen quite a bit because of the telecom business. So that's just one niggling worry that the street has.
Okay, let me toss that to Rima. Rima, your thoughts on RelGeo numbers, and is this high capex negative for Bharti? An idea?
Yes. First, let me just run through the numbers. As Sonia pointed out, the biggest positive is the fact that the average revenue per user, or ARPU as we call it, has pretty much, they managed to maintain it. So the ARPU has only fallen by 1.8% on a quarter-on-quarter basis versus peers like Bharti and Vodafone, which saw a near 10% decline in their ARPU. So this is despite competition and initiating pricing cuts. They've managed to hold on to their ARPU, and the absolute ARPU level is also higher than that of Bharti. So 134.5 rupees for Jio, Bharti is at 105 rupees. A quick run through of the numbers. Revenue growth 13.8%, margins improved by 100 basis points, profit has gone up by nearly 20% to over 600 crore, and all these three parameters are actually higher than street expectations. Net subscriber addition is positive, but on expected lines. So they continue to add about 9.5 million subscribers per month. Data consumption is the strongest for Reliance Jio, even in terms of absolute numbers. As you rightly pointed out, capex has gone up. In this quarter, it was at about 170 billion rupees. But that, I think, the street expects. And even going ahead, I think high capex will be there. Bharti has also been investing a lot in capex. Idea and Vodafone have fallen a bit short. I guess they were waiting for their synergies. But yes, on the whole, good numbers for Jio. A little negative for Bharti because their performance didn't match up.
Okay, so we'll keep our eye out on Reliance Industries. ICICI Bank was the other one. The slippages have fallen quite a bit. Abhishek, how did the numbers look?
Well, Sonia, to begin with, they are a mixed set of numbers. Now, while you enlightened that slippages are down to 4,036 crore versus 15,700 crore, the actual non-watch list slippage actually remains on the higher side at 3,651 crore. The net interest margin has been on a declining trend and is on the lower side in 6 quarters at 3.19%. The stress assets have increased by 12,000 crore because they have now SME portfolio of about 12,200 crore, which is coming under stress. In absolute value, the gross NPA has declined by 1% sequentially, while as a percentage of customer assets, the gross NPA ratio is down 3 basis points quarter on quarter to 8.81. However, analysts remain bullish on the stock. Their target price actually ranges an upside of 23 to 45% compared to the closing price of Friday, and they have mentioned that it is now FY20 earnings which will see a revival for ICICI Bank.
Okay, so both those things, FY19 earnings are going to get a hit, but analysts remain bullish. In this bullish world, I guess they don't have much of a choice. Bank of Baroda?
Well, Lata, very strong set of numbers. You know, the domestic loan growth for last 6 quarters is on an uptrend and is now growing at 20% on a YOY basis. The credit cost or the provision for NPA divided by advances ratio is at 12-quarter low of 1.7%. The international NIM at 1.49% is the highest in last 9 quarters. If you look at the absolute value, the gross NPA has declined by 1.1%, but due to the fact that loan growth was down 3% quarter on quarter, the gross NPA ratio increased by 20 basis points point to 12.46%. Brokerages remain bullish on the stock. Target price ranging between 160 to 190 between Morgan Stanley, Nomura, BNK, etc. Back to you.
Okay, Bank of Baroda, PSU banks have been on a tear last week. SBI was one of the big movers. HCL Tech, Rima, the order book looked very good this time.
Yes, the highest ever deal wins for HCL Technology this quarter. But if you look at pure Q1 numbers, it's a mixed bag. So revenue has missed expectations, margins have come in line, profits are higher than expectations, aided by a higher other income and lower tax. But the miss has come in on the revenue front. So the consolidated revenue on a constant currency basis has gone up by 2.7%. That's aided by acquisitions. On an organic basis, it's estimated at only 0.7%, which is a miss. Margins have been pretty much maintained and profit has gone up by nearly 8%. Despite a soft start to the year, the company continues to hold on to its full year guidance. So for the full year, they continue to estimate constant currency growth of 9.5 to 11.5% and margins of 19.5 to 20.5%. Some positives are highest ever deal wins. And finally, infrastructure management services, which is soft in Q1. Given the deal wins, there is an indication there will be a recovery going ahead.
Right. So good for HCL Tech. NTPC numbers? Anisha?
Well, they were a mixed quarter, Lata, because the top line growth came in better than expectation at 14% growth. That is, even though the generation was in line, the realizations for the company has improved. Now, the profit came below street estimates. It actually declined year on year, and that is why the stock might see a bit of pressure today. Now, the other income for the company has declined, and there are a few one-offs. But Deutsche Bank, for example, believes that the core profits are higher. They also believe the second half of the year is going to be better, as the under-recoveries in this quarter were not account of thermal plants, but because of the maintenance of other plants. They have cut down the target price by around 5%. Actually, the EPS estimates by 5%, though they remain a buyer on the stock with the target price of 200. Back to you.
Okay, thanks a lot for that. So that's an NTPC. But you know what? There were a slew of numbers that came in post-market. As Mangalam is here to tell us more. Mangalam?
More than just a slew, Sonia, actually, if you take a look at it. Prestige estates out there, good set of numbers. New sales value up about 65%. Persistent on a weak base of fourth quarter. The dollar revenue grew by about 6%. The margins also improved by about 200 basis points. Godavari Power in its part, that one was really the standout performer. If you have take a look at their profits, that grew by a factor of 9 times. If you take a look at JK Cement, though weak set of numbers coming in, the margins actually did decline by almost 600 basis points. So keep an eye out on JK Cement. Lumax twins, Lumax Auto and Lumax Industries, both the stock showed revenue growth of close to around 40%, EBITDA uptick of 60% as well. Coromandel International out there, the net profit grew by 25%, led by an improvement on their operating performance. XL Crop Care too, the margins improved by in excess of 250 basis points. Apcotex Industries, small company, but the revenue grew by about 25%, margins improved. And finally, we have Hitachi, not a good set of numbers. The margin declined by about 150, 160 odd basis points.
Okay, thanks for that. Let's take a break from numbers, shall we? There was some news flow that came in that the RBI is all set to do a fresh round of AQR, which is asset quality review. In simple terms, it means more provisioning of the stress that the banks are seeing. So this is a negative for the banks?
Well, it will be. It's still a list under discussion. Reserve Bank has asked banks to check out and come back with the impact on profit and on capital. But the point is that there are about 200 to 240 companies. Each banker gives me a different number. So there are about 200 to 240 odd companies. Many of them are recognized. See, Reliance Naval, JSPL, Ratnagiri Gas, JP Power, JPVL, that is Lanco, Rolta India, GMR, Patel Engineering, KSK. Some of these are already recognized, but the Reserve Bank is saying that they should be recognized from an earlier date, like I said before, and therefore it could mean higher provisioning. If the entire thing has, plays out and the banks don't get more capital from the government, then they have a real problem. At least about 50-60,000 crores more of capital is needed from the government to meet this extra, NPA provisioning. That would be a negative for many of the PSU banks in particular. Banks like ICICI are well capitalized, so they won't have a problem. It's 18% capital adequacy. So I expect more for the PSU banks, a negative impact.
Okay, well, let's try and wrap this up quickly. There are some stocks that are in the news this morning. Anisha will tell us more. Anisha?
Well, yes, Sonia, I'll start with the big mover of last week, and that was Adani Green, up around 50% last week. But today we have a bit of dampener as the company informed exchanges that a 250 megawatts solar project has been annulled. So we might see a bit of red tick on that. Moving on to RITES, which was up around 20% on Friday itself. Now we know the reason why, because the company has bagged an export order worth around 567 crores, which has to be completed over a period of next 27 months. Moving on to Tata Power, wherein we have unverified reports that the company might be interested in picking up 2 hydroelectric projects. This is from Equest Energy, and remember, this can be for a value of around 2,700 odd crores. Now the company's renewable projects have been doing well. Their balance sheet strength is all right, so the street might take it positively. Lastly, on Thyrocare, because the board is expected to meet on August 4th to consider buyback, so sentiment positive.
Okay, so very quickly, we'll try and make this quick. There are plenty of stocks to talk about. Let's recap them. Stocks with positive news flow this morning: Reliance Industries, ICICI Bank, Bank of Baroda, all on numbers. Prestige Estates, Persistent Systems, Godavari Power, Lumax Auto, Lumax Industries, Coromandel International, Excel Crop Care, Apcotex Industries, RITES, Tata Power and Thyrocare.
Okay, that's